pretty good. Pretty good. He's pretty good.
Just
I think we'll go with Stepford. I don't have any instrument
I just so love that.
that was the worst experience. Cable district.
It's like Sprint myself.
Oh, yeah.
Sprint.
Yeah.
That was a nightmare. I probably still have that folder. My little file box. So I have all that. Forever. Honeydale, this is Andrea calling from AAA. Calling in regards to the accident that happened on the 25th of December. You could give me a call back, or if you could just, the only piece of information that I need from you is your driver's license number. If you would could possibly provide that to me, I do need that for DMV purposes in order to send the SR1 form to notify them that, that there was valid coverage on this vehicle. It is very important that I get this information as soon as possible so I can send this to DMV on your behalf. You can reach me at 626-294-4651. Please reference again the AAA claim number 014-513-140. Again, all I need is your driver's license number. Thank you so much and have a good day.
Well, why do they have to report that to the DMV? the reporting. That was Andrea from AAA. She needs my driver's license number, so that she has to report it to DSP. Well, I start. Close this. Hi, everybody. Everyone doing okay? So there's some comments about EG. So I want to start with the pound, and we'll see about the inevitability, and maybe it continues, but look at cable. Good morning, Mark, Brock. Sell stop guys are nervous. The inevitability of EG moving much, much lower. Yeah, doesn't have to do it today, Arena. Good morning, Hugo. Good morning, Sinatra, Monica, and Paul. Alexandra. Hello, Sinatra. Scott Henderson, my trading warrior brother. So, okay. So, yeah, EG is under pressure, right? It is diverging here, though. So, with EG under pressure, traditionally, of course, the Euro's your preferred short, right? There it is. But this action's hard to pass up in the pound. Looks like a 3 to me, 3 attempts up here without being able to close above 137. So it's worth a shot. It may not decline as rapidly. And, when you look at EG, it is also possible that we could have some type of correction here, right? So they've cleaned out all the stops. I wouldn't buy EG, but another possible failure here. Look at the daily. We're diverging quite dramatically here. And the off number for this week is back at the breakout. It's all the way down at 135 and a half, so it's over 100 pips lower. But you know what? Every trade is just another trade. Another feature today is, at least so far, we've had a couple tests of the neckline. Didn't quite get there in Kiwi dollar, and did it here. And measured move is down to 70. So now I don't think you want to have be short on closes back over 71.45, 71.50 on this one. And this is pretty interesting here. Okay, I don't have that up, Sanse, and I'll leave that to the team for crosses. But Canada went right to 61.8, tagged it, right? And I think there's a Bank of Canada today at the bottom of the hour. But this was the break I was looking for. I thought maybe 680 or so, but we'll see. This is a nice looking fib correction. Could it stretch under here and go 78.6? Yeah, but oil, talked about it yesterday, that maybe we could get a lift back towards new highs. That has almost happened, and that's a pretty ugly 2-hour candle that we're getting there in crude. So I really think it was this rallying crude back to previous highs that was also part of the sell-off, along with the dollar weakening. But crude at new highs, and Canada only gave back 61.8. Everyone see that? US dollar yen still moving sideways in this range. You know, you almost have to respect it because we had this real directional move off 102.60 to 104, right? And all it's doing to work off the overbought condition, there's your big move, is move sideways and actually got pretty oversold, not giving back much. So, you know, this still could be primed for a breakout. It gave up no ground with the dollar weakening. So I have to respect its relative strength with the dollar coming off and getting to the dollar itself. I think there's another push left because what do we have here? Guys, what's missing? Anyone know what's missing here? Didier? You know. No. There's the picture. What's missing? Ren knows. Right. Okay. Third, Gavin knows. Let me ask you guys, Ren and Gavin, do you use that in your trading now? Recognizing that pattern taught by a one-trick pony, Dale Pinkert. I have a few other tricks, but it's one of my favorite tricks. Okay. Okay. The trick, it's a formation. I tell you what, Dulce, you sign up and take a annual deal. You take this annual deal here, and I'll give you a complimentary. You could join a session that I do on Saturdays, and you'll learn about 3 drives. So if you know, that'll be my contribution for you doing something good for yourself, not for me, for you. If you go, oh, you already are, okay, all right. I wasted a whole sales pitch on you, but let me extend it to everyone. Anyone who isn't a subscriber to Forex Analytics, I'll let you into the Eagle's Nest on Saturday free for a session. Okay, it's a very small group. It's only 3 of us, and we meet on Saturday mornings. So if you want to take me up on it, you could just Skype me at DJ Pinkert1, and you could be in there for free. Okay. So Blake, here we are, Inauguration Day.
Yes, here we are. Good morning. It's interesting. I'm not really expecting anything big. Although, I mean, there's obviously things happening today. I'm not expecting the market to do anything exciting. We just have to be obviously on guard, waiting for possible volatility, just in case something silly happens. But I think, that there's so many precautions being made right now that I doubt anything wild's going to happen.
Yeah, the capital isn't what I would call a soft target anymore.
No, and nor are probably any other state capitals at this point in time. So, I doubt there's going to be anything really to write home about. But there are things, like I have to say that there's there's a lot of executive orders that are happening today. I think Bloomberg said there's 15 executive orders as soon as Biden's sworn in, mandating mask wearing on federal property, rejoining the Paris Climate Accord, revoking the Keystone XL pipeline permit, revoking authorization for Trump's border wall, and his travel ban on some majority Muslim countries. That's some things. Hold on, I there was more. Hold on, I had it. see if I can find the rest of it. Anyway, there's a, oh, here we go. Extend the pause on student loan repayments and extend the eviction and foreclosure moratorium due to COVID.
Yeah.
We'll keep the US within the WHO, and we'll ask NIAID director Fauci to speak. He's gonna, okay, so Fauci will be saying something, I guess. And also reports that Joe Biden will plan to ask Surgeon General Adams to resign his post. So there's obviously, big changes. And I think a lot of, the rest of the world, especially when you're talking about the WHO and you're talking about the climate accord, the Paris Climate Accord, which will rejoin, I think a lot of the rest of the world will look favorably upon these types of things. Like, I get like the WHO situation as far as, what we contribute versus maybe other countries. But also during a pandemic, if you're dealing with, obviously we're dealing with a pandemic, not having a coordinated effort globally doesn't make any sense to me. I never got that. That one was a head scratcher to me. But like after the pandemic, okay, make your stand, it's fine, but let's get through this first, you know what I'm saying?
Yeah.
But anyway, we have, like I said, there's a lot of things happening today because it's the inauguration. We also have the Bank of Canada today. The market is looking at the Bank of Canada and expecting them to be a little dovish, which, when you have the dollar Canadian down at the 618, as Dale pointed out, at 129, 126.90. A matter of fact, I picked up some dollar Canadian down there overnight. If you read the analysis on Forex Analytics last night, the basic technical end of day analysis, the 126.90 level may come into view, which may attract buyers overnight. Obviously we've bounced from there, but this is a level that we'll be watching going into the Bank of Canada, which is just and it's just a little less than 2 hours now, because it is at 10 a.m. Eastern. So matter of fact, let's go ahead and write down those numbers since we're looking at it. 126.90, and let's say that breaks. Then we have 126.60 beyond that. Resistance right now is 128. Oops. Which would be right here, and then 128.30. You guys know that that's key, right? 128.30. Okay. Ahead of the Bank of Canada. Now, the euro is obviously really weak today, and if you guys missed it overnight, we hit the 618 basically at 21.60, and then we're slipping back down towards support. Remember, AB equals CD actually points to 120. I know we had a bounce and a recovery, but it's still trading heavy, and just keep that in mind. There was some of the news that came out overnight regarding there was some news about the euro basically doing some sort of yield curve control and trying to control yields, and basically that's to control some of the lending between different European countries, like Eurozone countries, not necessarily against other countries. And I think the market initially was like, oh man, that might be bearish. But the euro is weaker regardless today. But I don't think that overall is going to be weighing on the euro. Like, I don't think that's the reason why you should be short. Let me just put it that way. So 121.60 is resistance. Support 120. 50. And we are in a range. Cable, another rejection at 137. We're in a wedge, guys. You know, we broke the highs briefly, which is, you know, stopped out some shorts near term. So I have to say we have to be really careful with the cable right now. We could slip all the way back down to 135.80 without much problem. I know anybody who's long the cable overnight at 137 or above is probably freaking out right now. You know, the ones that picked it up above here,
Yeah.
we have a bullish wedge. You know, we've been talking about it. It's a bullish wedge, you know, consistent highs, but little false breakout overnight. It's probably going to bring us lower today. Aussie, previous trend line, rejection. So 77.50 is going to be key resistance. And you can see that the apex is tightening here. So now 676, this trend line comes in at 76. Let's call it 85. If that breaks, that'll turn us bearish in the Aussie. Kiwi. That's a flag. Still head and shoulder pattern. Neckline at 71.50. Support. That's what the completion of the head and shoulder pattern does. Takes us back down to 70 cents. Okay. So dollar Canadian, we got that. Dollar Swiss. Same as yesterday, but with the euro as weak as it is right now, you know, obviously the Swissie's picking up, but I still think that this is, you know, trying to develop an inverted head and shoulder pattern. But what I'd love to see is I'd love to see a little bit of a dip in this, in the dollar Swiss. But frankly, without the dollar Swiss dipping overnight, or let me take that back. Yesterday, when the euro was at 121.60, without the Swissy dipping down here to, you know, 88 and a quarter, I don't know if it's going to be able to do so now. I mean, we'll see, but you know, I'm not super optimistic about it. I still think that resistance right now is 89 and 89.20, but we'll just write 89 and a quarter. Support being 88.50. So. That's key. So you got to watch that, especially if it breaks. We are in a range. Dollar Norway. So the US dollar Norwegian krona, if you look at, I wasn't really super sold on the fact that this was a, you know, descending channel. I know we've had it drawn out this whole time, but the spike higher here on December, you know, 21st or whatever, that kind of, you know, had me just questioning this channel a little bit. But the fact that the US dollar Norwegian krona rallied out of the channel, it was a strong rally. We came back and we respected the channel, also the 50% retracement, really signals to me that we need to be respectful of this channel now. Okay, so that support comes in at 850. Resistance 860. Well, 864, 865, just right around there. It's bearish for now. But yeah, we get above this previous support, acts as current resistance. We get above that, we should squeeze. And then you have this, you know, major downtrend line you'd be dealing with right after that. Sorry guys, I need to do this. Okay. Let's talk about the US dollar Mexican peso. So here's the dollar mex. Okay. The dollar mex is probing these lows. The dollar mex is trading heavy. I'm happy that it's above. It hasn't stopped me out yet because it's above 1959. So it keeps holding the 1960 level, basically. But man, it's trading heavy. We have to get above this 1975 level really to start turning things. So I'm almost going to flip it over to a bearish designation because it's just trading as heavy as it is. But I think a lot of that has to do obviously with stocks that are, just continuously bid. But it is something that we need to pay attention to because it's trading heavy and it hasn't bounced. And I'm starting to get a little concerned that we're in for a, nice, stop run in the dollar Mexican peso soon if it doesn't, start to bounce. Let's go to the dollar index. So here's the dollar index. That trend line didn't matter. I think dips back down to 90 cents will be, pretty well supported here. And resistance right now, as you can see, just from the spike high, is at 91, basically. And we're smack dab in the middle of this range. So it's tough right now to get too directional with the dollar index while we're below 91, but above 90. I don't really want to be bearish down here after breaking this downtrend line, major divergence or relative strength, but at the same time, I'm not overly bullish. We get above 91, that means the euro is probably trading below 120.50. That gives us a straight shot between 91 and 91.75, which means that would probably take, I know the euro, if it breaks 120.50, we're probably going to see 120 pretty easily. I'm confident about that, but I'm not super confident that we're going to see 120.50 today. So it's hard, like I said, it's hard to get really directional at this moment in time as we're waiting for, to see if we're going to challenge the upper or lower end of this range. So 90 support, 91 is resistance. We are range bound right now. Dollar yen. Guess what I'm going to write about the dollar yen? Dale, you'll never guess.
Range.
Yeah.
Home on the range.
Oops. Okay. Same numbers as the last 2 weeks. So 104.40, 103.50. And, I guess we could say, we are building a triangle. If you guys are into trying to trade out of this triangle, bullish breakout, bearish breakout here, you can, I think you can give it a whirl here in the dollar yen if you want to. Might be good for 10 or 20 pips, if you want to follow that triangle. Just some food for thought. Okay, gold. Hey, look, stocks are up today, by the way, just in case you guys haven't seen it.
Shocking.
What's that?
Shocking.
Shocking. Never happens. That never happens. Gold. We got close to 1860. We got to 1857 and then dropped a quick $25. So I guess our numbers here of 1860 and 1820 are still valid, right? 1820 being right here, this horizontal support. Right through here. Okay. Last but not least, the S&P. Now the SPOOs, which again, we're up today. We're up against a trend line here, which comes in at 38.20. Beyond that, then we have 38.32. So I mean, I think we're range bound, but you know, the stock market has defied gravity, as you guys know, and it just continues to grind higher. So I guess support's going to be down here at 37.50. Okay. And I guess I just have to flip this back over to bullish for now. But it is a little, you know, obviously it's like getting a 30-point S&P, you know, sell off at this point. It seems like a near impossible feat. But anyway. All right, so here's your bias chart. And Dale, not a lot's changed the last couple of days, has it?
No,
I
nothing.
mean, we're pretty much, you know, one of the other things that I think that we have to, you know, also, you know, pay attention to is that, you know, everybody was thinking that with a new president of the United States, there's going to be, you know, a sell-off, but I don't know if that's going to be the case. Case in point today, right?
Probably because the president doesn't matter. I don't mean the specific president. I mean in general.
Yeah.
I mean the markets are not rallying because of earnings expectation, because if they were trading based on earnings expectations, they should have been a lot lower than we currently are. So, you know, the argument about Biden being negative for stocks, which is very valid fundamentally, because he has openly said that he wants to tax more rich people and corporations. So that immediately means less earnings, but stocks are not trading on earnings anyhow. So why would they care?
Right. Good point. Hey, just FYI, we have right now Canadian CPI coming out. This is ahead of the Bank of Canada. I'm going to stick around with you guys through this data here in just a couple of minutes. But just remember, the Bank of Canada is expected to meet today. We aren't expecting any fireworks, but that doesn't mean we won't get any movement. I mean, you know, Bank of Canada is supposed to keep rates unchanged. Just really quick, Steve, before I pass it over to you, we're going to go through that. I want to make sure that I do mention that if you haven't visited the webinar sponsor, that's Pepperstone Securities. But if you go to the Forex Analytics sponsored page, this is where you can actually open an account and get up to 4 months free of Forex Analytics if you open a Pepperstone account, if you're outside the United States and Canada. So you have to click this link to do so. And if you open an account, you can get 2 months free when you open an account, another 2 months if you trade 5 standard lots, which is 500,000 worth of currency. I think it's, Steve, you said it's not within a specific period of time, correct?
No, it isn't. Yeah.
Yeah. So make sure that you guys do that when you get a chance. And then also, if you haven't taken advantage of our pricing right now, you know, that the special that we're offering, that we offer only a couple of times a year. A lot of people have been waiting for it, and a lot of people have already taken advantage of it. Make sure you do so. This is the best prices you're going to see all year long, pretty much. So, so anyway, I just wanted to mention that we have one of the things that comes with Forex Analytics is this data flash, which is a great resource for data when it is released. And then also we're going to be offering, just so you guys know, and I talked a little bit about this yesterday, Live Squawk. We have a relationship with Live Squawk, which you can see all the live, these are Bloomberg and Reuters headlines as they hit. But also you'll get their audio service here in the next couple of weeks. We're going to be launching their audio service, which is a discounted amount. If you went to directly to Live Squawk, you're going to get a discounted amount being a Forex Analytics subscriber. So it doesn't matter if you're a light subscriber or a premium subscriber, right, Steve?
That is correct.
So you could be using the, let's just talk about that really quick. You could be using the light version at $19 a month, and then you could have the audio squawk at $50 a month, which is $10 cheaper than going directly to Live Squawk. Is that correct? Did I say that correctly?
Yeah.
Okay. That is something. All right, let's talk about the dollar Canadian, or dollar Canadian. What is the dollar Canadian, Steve? Have you ever heard of the dollar Canadian? We had CPI.
No idea. Is it edible?
We had some CPI data come out of Canada, a little weaker than expected. Now it's interesting ahead of the Bank of Canada because they could really be a little bit more dovish today if they're trying to, get inflation a little stronger. If they feel that they're behind the curve a little bit with CPI. So watch the dollar Canada today, dollar Canadian. If we break above like this 127.20 level following the Bank of Canada, we might get a squeeze back towards 128. So anyway, just some food for thought. So Steve, what's going on? What's up in your world? What are you thinking? What's going on with this is a big day, in history, as we have a changeover, between changeover in the U.S. with leadership. So how do you feel about that as a Greek?
Listen, clearly, if you asked me as a Greek, that's an extremely positive change. Because Trump had, as many people know, very good relations with Erdogan because he has a lot of businesses in Turkey. So the foreign policy of the United States is going to be a lot more friendly with Biden as president than with Trump. So as a Greek, that's my answer. Other than that, having to do, for example, with the economy, I think it's going to make very little difference if we're talking about the side of the markets. But I do think that there are going to be a lot more social policies being implemented and probably an acceleration of the damage to the economy that is anyhow ongoing throughout the presidents following Reagan.
Yeah. What's interesting, Steve, is when I remember when I got when I got married in Greece, and I visited Greece for the very first time back in 2000. Oh shoot, when did I get married? 2003?
I won't tell Lisa, I promise.
Yeah, 2002. 2002. Oh my gosh, 2002. And when I got married in Milos, for those of you that don't know, I was married in Greece. And I remember my first experience in Greece being a Republican from the United States. That was an experience for me. The topics of conversation after drinking a few bottles of wine at 2:00 in the morning was always interesting. My first experience, although I had the greatest time. It was just so much fun debating, and talking about, all that. It was fun, you know.
The problem is that the lines between being a Republican and being a Democrat nowadays, outside of social issues, I mean, in the topics that have to do with economy, which anyhow is what we focus on,
Yeah.
are extremely blurred, which is a big problem if you ask me.
But back then it wasn't so much.
Yeah,
and
I
that-
know.
that was during,
There's still big
uh,
differences between the parties. That's true.
Yeah, it was Bush Jr.'s first term, and I mean the you know the discussions were quite heated at the time, but fun and nevertheless. Anyway, it was. But I'm gonna pass over to you. I know there's things that you want to talk about today. By the way, Stelios is away today. His kids had to come back from school because of a COVID scare, so he's
yeah, one of the teachers were tested positive, so you know.
Yeah, it stinks. You know, my kid's football coach, you know, had a COVID test last weekend, and then he, you know, he found out he was negative. But you know, those are the scares when you have kids. You have to deal with those types of things, you know, in order for your kids to live a semi-normal life during this period of time. So anyway, guys,
let's hope that
thank
that's
you.
going to be behind us soon enough.
Hopefully, let's hope so. Guys, I want to thank you all for your continued support. I'm going to pass it over to Steve and Dale, and thank you so much for listening in every day. And I'll talk to you guys soon.
Thank you, Blake.
Good
Thanks, guys.
hunting today, Blake.
Thanks, you too.
Bye bye, mate.
Hiya, Steve.
Hey, Dale. How have you been?
Okay.
Everything all right?
Kidding. Yeah, no, not everything.
I
One is
would,
everything.
no, yeah, that's very true. Yeah. That is very, very true.
It's like life is like railroad tracks. Things could be going good on one track and doing something completely the opposite on the other track. So it's always that way, isn't it?
How was Forrest Gump's mom used to say it? It's like life is like a box of chocolates. You never know what you're going to find in it.
Yeah. That's a great movie.
Indeed.
In fact, you know, your analysis is kind of like that. You know, you keep it simple and clear and concise, and so I'm looking forward to your looks today.
Yeah, I wish they were very different from yesterday or the day before, but markets have quieted down. Let's see if change of presidency today and whatever comes with it can stir some volatility back in the markets. I've said many times before, I assume that, you know, this period of you know, zero volatility and non-stop bid and you know, many days seems like Groundhog Day is not going to last long. I think we're going to get some type of a scare, some type of a shakeout, you know, within the next few weeks, a couple of months. But you know, I mean, you never know which day that's going to be or what the excuse might be, if there is any. Let's see if, you know, Biden, I don't know, perhaps, you know, some kind of a policy announcement, you know, some kind of a picking for a position in the government. Who knows? Let's see if something like that can bring something on the table. Definitely choosing Yellen to be secretary of the Treasury doesn't help in that direction, quite the opposite. Let's see what the rest does.
Was she confirmed yesterday?
No idea. Didn't
Yeah.
even pay attention because
Yeah.
it's a given. You know what I mean? I think there is, you know, no chance.
I think it's unusual to get a cabinet confirmed before you're even inaugurated.
Who cares?
That in itself, I think, is different.
You know, I focus mostly on what has to do with substance. You know what I mean?
What you mean money?
No, I mean, for example, Yellen being the Secretary of the State. Now, is she confirmed like one day before, 2 days later? You know, that doesn't really change market expectations about Yellen, for example, or Yeah.
money.
Or
Yeah.
the treasury, yes.
Yeah.
In any case, what remains the main theme, and they will start from there, is that here is the S&P, here's the Nasdaq, here's the DAX. Do you see a theme unfolding here?
Yes.
Here's the
Wedges.
here's the FTSE.
Yeah.
Yeah, so on and so forth, right? So what we see here is two things. First of all, the uptrend stubbornly remains. Second of all, we clearly have some momentum loss. That much is clear. Now, as I've said before, the problem with this type of wedges is that they're not steep enough, to really give a very high confidence that the direction of the breakout can more or less only be to the downside. So I wouldn't be that much surprised if we end up having, a melt higher, like some type of a, blow off out of these wedges, as I've been saying a few weeks ago. But still, also remains a possibility that these are going to produce some type of pullbacks. As I've said, I'm not expecting like amazing fireworks, at least not in the duration of any type of pullback, because they don't even pretend anymore that they let the market function on its own. I mean, we know that any serious sell-off that seems to be having some to stir up like fears in the market will immediately be addressed by the government, the Federal Reserve, and everybody with whatever kind of stimulus, sweet talking to just reverse it. So the sell-off might be sharp, but I don't think it's going to be long-lived. In any case, until we see a breakdown from all these formations, there is not much to talk about. Now, having to do with the euro did end up producing yesterday a morning star formation, which is a bullish reversal formation, right? And we should give it a little bit more credibility since it's a candlestick formation. So by default, it's not like this super important signal on its own. But the fact that we did that on the 38.2% fib of the last move higher, the fact that that area was also a horizontal support resistance area, the fact that the 50 DMA was also confluencing with all that, makes that attempt a little bit more important. I know that so far today, the daily candlestick is a negative one. So far, it looks like a shooting star, but I need to remind you it's still quite early on the day. So, take that with a pinch of salt. Now, having to do with anything else in the Forex markets that's, or outside the Forex markets, for example, crude oil, since I have it in front of me. Crude oil found support. We talked about that yesterday and the day before, found support in the broken channel trendline resistance. This time it acted as support, as I said before. So we're now, in essence, about to retest this confluence of resistances at 54. Undoubtedly, remains very well bid, right? And, I wouldn't really expect it to break down as long as the rest of the risk assets don't. And if it did, it would give me, a little bit of pause and think that perhaps it's leading the indices, but so far it isn't. I mean, so far it isn't breaking down, so there is nothing really to talk about. Now, having to do with precious metals, so far I still see consolidation here in gold, which tells me that there is a good chance that there is, one more leg of downside before we can resume the upside. And the recent price action in silver also seems to be a consolidation, albeit in the case of silver, we have the benefit of the doubt in the sense that we haven't broken down from the broken down back within the channel. So from a technical perspective, there is still an argument that perhaps we're about to propel higher just from here. Now I know that the chances that at the same time that gold is going to be breaking, down and silver is going to moving up are extremely low. Yes, on occasion they move in different years, let's say. So one can move a lot more than the other, but moving in opposite directions, that's something extremely rare. So, that's a little bit perplexing. And given how gold looks like, I'm hesitant about buying silver here. If gold looked differently, I would probably do it without a second thought. In any case, even if we see another leg lower, the main thesis remains. I'm bullish both of them. Platinum is also consolidating. I think a bullish consolidation. Palladium is consolidating, long-term consolidation, but it makes sense because it comes after a very long-term parabolic move higher, right? I mean, we bottomed out in the very start of 2016 at roughly $450, and we topped out near $3,000, right? In February of 2020. So we're talking about a four-year plus amazing uptrend. And after such a long period of an uptrend, it makes sense to have a long period of a corrective move. Now, I think it is bullish, the fact that we seem to be correcting more in time than in price. So I do think that, the more we consolidate here in this manner, the higher the probability that palladium is going to end up breaking to the upside. But it's not easy to predict when that is going to happen. So keep that in mind. Now, one more of the wedges, which I didn't mention at the beginning, but we keep talking about it every single day, is the wedge we have in copper, right? So no development here either. I mean, we're still holding on this wedge. Yes, momentum has clearly waned. We are clearly diverging. But, on its own, not enough of a signal. Nickel, same deal here. Natural gas, for those that were asking, still remains quite complicated. That's the problem with corrections. Who knows? Can the correction be something like this? I don't know. We have to wait. I'm pretty sure this is a corrective move. I'm pretty sure this is going to be a corrective move, but who knows? Perhaps it's going to be like this, right?
Yeah.
I still have very high confidence that this is a corrective move, but we have to keep redrawing as the correction develops. So perhaps we can see a move closer to $2 before we can explode higher. But as I said before, I do think this is a corrective move. So at some point, I think natural gas is going to explode higher. Now let me go through some of your questions. 220, a good floor. Yeah, 220 is also the 61. It's also horizontal support area. It's the 61.8 of this move higher. So yeah, 220 might do the job, and we might not even need to retest this channel. So I totally agree with you. 220 is a possibility. There is also a third possibility here, and there is a possibility that we're going to find a low very, very soon to continue the sequence of higher lows, as you see here, right? We have a sequence of higher lows so far, but that's not necessarily the case, right? Because we might find a low here, and then in essence, the sequence of lower lows is going to be like this, and that, and then explode higher. So keep that in mind. But yes, 220 and then roughly $2, definitely areas of interest. Nice reversal from any of these levels. It's going to get me really, really interested, because I believe the correction will have run long enough in time, and the risk reward is going to be quite appealing down there. Alternatively, you can wait for a breakout of this, channel in a decisive way, and buy the breakout. It depends on your style. Dale,
Yes,
the
buddy.
screen the screen is not frozen, right? Because somebody is asking if the screen is frozen at Palladium.
Not for me.
Okay, good. Okay. We addressed these questions. Do we have any questions from earlier? Because I was a little bit late of logging in. Anything that has to do with FX? I'm going to go to FX anyhow. I want to check some of the crosses, since we don't have much of a movement in the rest of the stuff today.
Pound Kiwi.
Yeah, that's one of the crosses we would check anyhow. So good. So to begin, since we want to talk about pound Aussie and pound Kiwi, guess where the pound found a high today? Because it has pulled back decently from the highs of the day, exactly at the triple confluence of resistances up there. So keep that in mind. We've said that 137.40, a really powerful area of resistance. Here is also the pound yen, right? You can see also the powerful confluence of resistances close to 143. So keep that in mind. Now, having to do with pound Aussie and pound Kiwi. So here is pound Aussie. Now, two things can be said about the pound Aussie. One, that it's still holding this important trend line as support, right? Two, that the rebound higher doesn't inspire, right? So I don't know. I think that it will eventually just go lower, and probably much lower. So I would be very, very skeptical. Of course, as long as this trend line is holding, buying, selling close to the trend line doesn't make much sense. But my feeling tells me that it's going to break down. Now,
Okay, we got Euro Yen is being asked for.
okay.
I think
In
you
the
just
case,
showed it.
yeah, I can see those. In the case of pound
Okay.
Kiwi, though,
I see.
look at this channel. We broke below it. We back tested it a few times. We got rejected every single time, and now we're back testing it again. So this is a key resistance area. I think this is a pivot area to see if we can actually break up back into this channel, or we're going to get rejected again from it. From a risk reward perspective, this looks like a nice short. I know that Stelios bought it down there, and this was a very, very, very nice trade because it has already moved higher, 500 pips. But I would start being more than a little bit careful here. Okay, just keep that in mind. Euro yen, yeah. So Euro yen, look at this. We had this channel. We broke above it. We developed that channel. We broke below it. And then yesterday we rebounded quite nicely. I mean, we formed a Morningstar formation there as well, but look where we stalled, back testing this channel. So, against that trend line, yeah, you can be short against that trend line. Alternatively, somebody can say that against, the low that we developed, you can be long. So, personally, I wouldn't be taking a position here, but you feel strongly one way or another. You have a decent risk reward to do both, to be either long against the low that we developed by producing this Morningstar formation, or against yesterday's high because we backtested and rejected the channel For the time being, I don't like this price action. I mean, it's not clear. So personally, I would stay away from it. Yes, I did cover the pound. A lot of pairs assets look technically like they're approaching the edge of the cliff. Yes, I agree with you. And they'll either fly or crash. I totally agree with you. I think that's exactly where we currently are. I mean, the market has to take a decision, and I think it will take a decision really, really fast. We will either see a melt higher within the next couple of weeks, worst case scenario, or perhaps it will be even sooner. We will either see a melt up in risk assets and another dump lower in the dollar, or a reversal to shake out all those positions. But I think whatever of these happens should happen rather soon. Question about the Aussie yen. So yes, we can revisit the Aussie and the Kiwi yen. We had a look at them the other day when I said that here's the Aussie yen that rejected this channel's trendline resistance, and remains to be the case, right? We do remain in this ascending channel, but we did reject resistance, so keep that in mind. And here's the Kiwi yen that seems like it has broken down from a wedge. So the two of them look somewhat different, right? Kiwi yen seems to have done a move to the downside, although there is no real follow through yet, but we do remain below the wedge. Now, the Aussie yen got rejected. I mean, so that, you know, that is technically speaking not a bullish development, but, you know, on the other hand, saying that it is a really bearish development, you would need to see the rejection followed by some kind of, you know, downside momentum. So far, you know, not that much of it, right? So, you know,
A little divergence.
oh yeah, divergence is all over the place, actually.
Yeah.
I mean, we have so many divergences out there. The vast majority of instruments are diverging. Now, somebody's asking about the main cryptos. Listen, my main thesis remains here. This looks to me like a bullish triangle here in the case of Bitcoin. Should produce, you know, a final thrust higher. And Ethereum perhaps has been leading this move by doing this.
2 drives.
Yeah, likely. And you know, this is an alternative interpretation, meaning,
Yeah.
right?
Hmm.
Perhaps that's how it's going to go. So perhaps it's going to, oops, perhaps it's going to do something like this. And then have like a deeper corrective move, something like that. So keep that in mind. So yeah, that's about Bitcoin and Ethereum. So I would, you know, I wouldn't be jumping the gun being short here, Bitcoin. As I said, this looks to me like a consolidation in time than in price. On the other hand, I mean, you know how volatile these things are. I mean, oh yeah, you know, this, you know, these instruments are just crazy. So, you know, Litecoin never covered that. What is the ticker like? LTC
Yeah.
USD, I'm assuming.
Yeah. That's it.
Yeah, if you're asking me about this looks bearish to me. Because this move lower, you see?
Yeah. Back to 100. Yeah.
Yeah, something like that. So this looks short-term bearish to me. So this looks different to me. Probably a corrective move, but a different type of corrective move, like an ABC type of move here. You say that it tracks Bitcoin, but I see a different formation here than I do in Bitcoin. So perhaps they will correct in a different manner. I'm not saying that they will end up doing like completely opposite things to each other, right? But you know, they can produce different type of like corrections, for example.
Yeah, rotation even happens in crypto, and that's something.
Yes. Very, very true. Do we have a guest today, by the way, Dale?
Kathy Donnelly is with us, the master of IPOs.
Huh, okay. Probably a lot busy then nowadays.
Yeah,
If he's many years in the industry and
she
sorry. I mean,
she talks about the life cycle of these IPOs and different stages they're in. She's excellent.
yeah, that would be actually interesting because I bet that, you know, if she's many years in the industry, she remembers the time that IPOs were actually companies going public because they had already proved that they have a track record of having a know-how of how to produce money. And then what they needed to do, and that's what IPOs were made for, was scale up that profitable model so they can actually make more money. So, you know, you went to the market with a proven track record that you can actually make money with a specific business. And then the market said, yeah, sure, I'm going to give you my money so you can scale up and make more money and we can make money with you. Nowadays, IPOs are like lottery tickets mostly. Of course, part of the mania, if you ask me, but it's going to be nice taking her input on that.
Yeah. So, are you through?
Yeah,
Should we bring Kathy in?
absolutely.
Okay. All right, Kathy, welcome back to Face.
Yeah, another interesting question from DJ. Will be interesting if she can speak to us about SPACs, yeah, versus straight listings. Yes, for example, yeah, exactly.
Right. Hi, Kathy.
Hi, good morning. How is
Good
everyone?
morning. Good. Happy New Year to you. I know it's
Happy
the
New
20th,
Year.
and I remember last year we talked and you talked about being really looking forward to the new year and the birth of new IPOs coming in and, you know, kind of freshens the slate. So if you want to share your screen, we could start talking about what's been happening in January.
Yeah, let's do it.
Okay. And maybe we could even start off with a comparison or your view on the latest trend in the market with SPACs.
Yeah, everybody wants to know about the SPACs, huh?
Yeah. Yeah.
All right, well, we'll touch on that, but
all right.
let's touch on what I think I know. I want to say I think I know for sure, but we don't know anything for sure in this world.
That's for sure.
But it's a new year, as you said, and we have new life cycles, I think, to look forward to in 2021. Okay. So that's my theme.
Okay. Thank you for preparing a nice PowerPoint for this today. Appreciate it.
My pleasure. And of course, just quickly disclaimers, everybody knows. So I quickly did a scan of, and I only went back to 2019, but I could have gone back to 2018. But I think if you look at these top 10 IPOs in the year 2020, and again, scanning all the IPOs from 2019 to 2020 that traded $20 million a day or more, yielded for me on my screen 135 stocks. Go ahead. You have a question?
No.
Oh, okay. I thought you were.
No.
Had a question there. So it's just a simple screen. All the stocks from 2019 to 2020, greater than $20 million a day. And then just what were the top 10? And here you go. These are the top 10. So I think a lot of us have probably heard of these. And look at these massive gains. I mean, just amazing. I mean, just blows my mind, some of these. And, you know, I didn't get them all. I got a few. But look at the IPO date. These are all IPOs from 2019 that were the top IPOs in 2020. And this is what I was alluding to you when we were talking, that I was looking forward to 2021, because now we've got the fresh IPOs from 2020 that could potentially now be our big leaders for 2021.
Okay.
So I wanted to reiterate, well, so what do they have in common? Well, I already said they all have an IPO date of 2019. They all undercut their first week low, and we can look at some. And this is some of the stuff we've talked about before, Dale. You
Right.
know, most 90% of IPOs will undercut their day one low. And here I just said, well, they undercut their first week low. So no one has to be in a hurry to catch these IPOs on the day one or the day two, or even the first few weeks. I mean, if you're a good fast trader and you want to catch that initial advance, if it has one, great, but you don't have to. There's no hurry, as we saw from those gains in the other slide.
Yeah, so really you don't have to have FOMO, although it'd be nice to already be in them before they went public and
Well, I don't know. Not if they go down. Well, yeah, right.
Yeah,
If you're the one selling it to
right,
the retail public.
that's what I mean. Yeah, right. So
Absolutely.
yeah, but you don't have to have FOMO because that's a great point that, you know, if you like an IPO, you don't have to just rush out the first few days when they're full of, you know, helium due to enthusiasm, that everything in markets, in life, undergoes testing. Would you agree with that in the IPO arena, that maybe taking out the first week's low is the beginning of the testing of the validity of that issue to
That's a
see
great
how it
analogy.
responds? Yeah.
That's a great analogy.
Yeah. Thank you.
Yeah, and we call that testing the due diligence phase. You know, that's how we coined it in our book. You know, the institutions are testing it, they're analyzing it, they're trying to figure out, you know, does this company really have its weight? Is it going to hold up to the hype? You know, does it really have sales and earnings, or does it have that potential for the earnings? If it doesn't have them yet, maybe it already has the sales. It's really going to hold the weight for the next few years, that they can get in and hold on for a while.
Okay.
So that brings me, then this leads perfectly into my next point. 70% of those top 10, okay, just those top 10 had an institutional due diligence phase. So that testing period that you were just speaking of,
Right.
that was 40 weeks or longer. So there were a few that were a little bit shorter, not that much shorter, but were 40 weeks or longer. So that's like, you know, 6 months.
Almost a year.
Or almost a year, right? 6
Yeah.
months to a year.
Yeah.
So in my mind, yeah, I'm stalking it.
Right.
And I've got plenty of time to stalk and even do my research, and really just, you know, reading the patterns, looking for those fundamentals to come in if they're going to come in, and then waiting for, you know, looking for that accumulation for when the institutions then are confirming that they agree the testing phase is complete and we're ready to commit some money to it.
Okay.
Yeah.
40 weeks,
So,
long time to think about things.
Yes. So now what am I looking for? You know, what am I excited about? Well, I already said IPOs from 2020. As of yesterday, my screen showed 77 in various life cycle phases. And so when I say the various life cycle phases, we've talked about this, you know, there's the initial advance, right? Which some of them are still in, you know, and we can look at some of those. Some of them are in that testing phase, in that institutional due diligence phase. And some of them are already kind of getting and starting that next advance after the testing, the institutional advance phase. There's not a lot of them, but there's a few. So there's definitely some to start stalking if you aren't already. It's not too late. We're only in January.
So how many have there been so far this month? New ones, new IPOs.
Oh, new IPOs. You mean for 2021?
Yeah.
Oh gosh, you know, I didn't even run the screens for
Okay. I was
2021.
just
I'm
curious.
still looking at 2020, but yeah,
Okay.
let's run that. There's only been like maybe 5 or 6, and of that were $20 million or more a day. I'll have to say I haven't run the 2021 screen
Okay, so let's just continue with your presentation. I was just curious. I mean,
Yeah,
we're
no,
not
it's a
even,
great question.
yeah.
There's probably
so-
less than 10, I would say, that are 20 million or more.
Okay,
So of these 77 of 2020 that IPO'd in 2020, only 8% already have 40 weeks of trading. So this is what I'm saying, you know, there's still a handful that are still, you know, in that testing phase. So these are the ones we need to be watching, and we got plenty of time because only 8% have really only been trading 40 weeks. And then of course, there's still obviously opportunities, the 2019 IPOs that have longer. I mean, 40 weeks is probably like the shortest amount of time is what I'm kind of pointing out, but it can still be a year, 2 years. One of the ones we talked about last year, Dale, was Snap. You know, that one had 2, 3, 4 years, and it only just last year finally broke out of its turbulence zone and has been having a brand new kind of institutional advance phase run. And then lastly, I just wanted to point out, and I kind of already said this, was that there's plenty of IPO advanced phase opportunities for the fast trader. So the charts, right? I was just reading an article about this stock. So let's pull up Airbnb, right? Because this is one everybody is I'm sure talking about, and I think definitely has a lot of potential this year. I mean, especially with, you know, the COVID, where everyone's getting the vaccine, people are surely wanting to travel and get out of their houses. This, you know, IPO'd at the end of last year. It's got a nice little IPO base. It's breaking out of it, but this right now, this is that IPO advanced phase. Right now, it looks like it's going to have a run. So what we don't know is it going to continue? Is it going to be short-lived, which usually it will be? You know, I would love to trade this because I'm not against obviously trading IPO advanced phases. I think they're great opportunities. But I'm not a fast trader by nature. I'm more of a medium, you know, buy that after that testing phase and holding on for those big gains that I showed you.
is each bar a week?
Yes,
on
this
this
is a
chart?
weekly
Okay.
chart.
Okay.
Yes.
All
This
right.
is a week. And this is a MarketSmith chart too, by the way. I subscribe to MarketSmith. So.
Okay. Oh, IBD. Now I know
Yes.
why.
Yep. This is IBD. Yep. DoorDash is a great in the IPO advanced phase. Asana. You know, and I'm just scrolling through a few of these here, but now here, American Well, this one, you know, with the telehealth services, it's in that testing phase. You know, it debuted in September, you know, so it could be getting, you know, tightening up. You know, we still got some time here, but what I'm just trying to point out here is that there's a lot of stocks out there, IPOs from 2020, and we don't know what they're going to do, but these are potentially going to be the big leaders for the year. And these are the ones that I'm watching. So here, Health Catalyst. Now this one was actually the end of 2019, because I did want to point out, you know, there's still some from 2019. It hasn't even been a year and a half yet. This line on MarketSmith is a year and a half, and
Okay.
it's just now getting
Coming
past
up.
this.
Yeah. The first day or week.
Yep.
Okay. So
And
it's
this black line, really quick, sorry to interrupt you, is the
That's
40,
okay.
this 40 week right here. So this is
Okay.
where, once I start seeing this black line on the MarketSmith charts, is when I'm like, okay, now I really want to start watching. Now look how interesting this is. Now, granted, this is the pandemic right here, okay, which most stocks cratered, but right when the 40 week started, that's when it's, you know, it came back up above, built this first base, and this is totally viable. This is a mature, what we would call a first mature base. It's breaking out of that. It still has to get through the turbulent zone, but this could be the start of that institutional advance phase. And this could be one of the ones we're talking about next year as a leader from 2021. You know, we'll have to wait and see. I don't know a whole lot about this company, but it's got the sales, so we'll see. So I'll pause. I don't want to.
Yeah. Yeah. So and the formation looks pretty constructive once it got back above 35 or so. So,
Mhm.
okay, so I'm getting a few questions. How many IPOs would one hold in the portfolio? How many, what's the most that you have carried in your portfolio positions in IPOs in different stages, Kathy?
Well,
What would you say the average is?
if it's in the institutional advanced phase after that testing phase, I mean, the majority of my stocks will be recent IPOs. I mean, I would have had no problem holding all those 10 IPOs that I showed you
Okay,
from 2020. Well, I will not do is like, let's go back to Airbnb. These institutional advanced phases where there can be very volatile, 5-10% a day swings. I can only have one, maybe two for me in my
Yeah.
portfolio at a time. But
okay,
once it's in its institutional advanced phase, like Zoom, I think we've talked about. I'm a holder of Zoom. You know, I can hold this, and I can hold Peloton, and I can hold Fiverr. I mean, didn't have Fiverr, unfortunately, but once it's institutional advanced phase, it's fine for me to have the majority of those in my portfolio.
okay. Is there an IPO with the symbol MP that someone's asking about?
Well, let's see, MP. So this doesn't show that it's an IPO on MarketSmith. Is this
Okay.
a SPAC
That,
potentially?
I don't know. He just, no, it says it's mining metal ores, but that's all he gave me was MP. Few people in here own it. So I'm not sure. Guys, is it a SPAC or an IPO? Owners of MP. SPAC.
Yeah, I
Okay.
can't tell, but I will say, I mean, it looks like an IPO, right? That started trading
Yeah.
in 2020, had a nice little base here. That, you know,
Yeah.
this definitely could have been its testing phase, its institution due diligence phase. And, you know, we don't have, well, actually, no, I take that back. This hasn't even been 40 weeks yet.
Yeah.
Yeah, so this is an interesting one. It reminds me kind of a SPAC, the way that it looks, but I can't.
They're saying it is a SPAC.
Okay, well then that makes
Yeah.
sense.
Okay.
The thing with SPACs that I find challenging is that you see, at least on MarketSmith, you know, I've got no numbers here. And
Right.
usually what happens is you have like no action. And then as soon as the news comes out that this company is going to join up with this company, then it spikes up. And
Okay.
and then it has like what is like an IPO advanced phase. So,
Right.
and you've got those 5 to 10% per day swings or more is what I've observed. So to be honest, I've stayed away from them at this point.
Okay.
Because again, I'm a more medium, slower trader than the faster trader. But I think if you're good with those, you know, faster rules, there's no reason to trade them. I don't have
Okay.
enough information to
You don't have
say
enough
they
data
go
to make a decision. There's no information.
exactly. I
You
don't know
know,
if there's a testing phase yet. I mean, if we look at DraftKings, you know, that's been a really great one. And it is still volatile. It's still a volatile stock in general. You know, the news came out back here, you know, it had that tight action where it wasn't doing anything. Then the news came out, oh, this company is going to bring to market. And then it was all volatile. And then I did think it was going to be done here. But, you know, it's still going. Obviously, there's the news about, you know, the betting and opening up in more states. But yeah, I don't know if they're going to create a testing phase because they've already been tested. I'm not really sure. I'm still trying to figure out that story.
do you think there's any implications about, you know, a lot of companies going public, direct listing, SPACs? I'm just talking about that there are a couple of different ways to go that wasn't available to private companies before. Is it a sign of anything that people are going towards doing SPACs instead of IPOs? Is it because it's less expensive in the you know, going through the whole process of meeting all the compliance tests and everything before you could be listed on an exchange in an IPO, and people are just, this is more cost efficient for people to do. What do you think the reason is for like a different way of going public, or bringing back just, you know, being what they call that, just being a listing, Kathy? Direct listing instead of an IPO?
Well, I think direct listing is different from the SPAC, of
Yeah,
course,
right.
but,
They're
but
two
I,
different options from
right,
going IPO. So
right.
why are
No, I
people
mean,
going that way?
yeah, well, I think it's exactly what you said. I mean, it takes out a lot of the scrutiny, and so it
Yeah.
makes it easier for the company to come on.
Yeah,
And
and commit
there's
fraud.
nothing wrong with that. And I think
Okay.
because we had such a strong market, it was just a great opportunity for these companies to get on
Yeah, okay.
quickly.
Because everything goes up forever, right? Is
Yeah,
that
it would appear so. It would appear
okay?
so. Uh-huh. But it will
All
be
right.
interesting to see if it continues. You know, if we continue to have this bull market this year, you know, and then next year, you know, how long will they be with us? Because, you know, I wasn't really actively trading back in the 90s, but my understanding is that, you know, this had happened back then as well. So, you know, and people are making correlations from this time to that time. And I can't really speak to that because again, I wasn't trading actively
Okay,
back.
well, you could speak to March of 2020 during the COVID crash. Would you say that um, even if IPOs were already through their testing phase and, you know, due diligence phase, um, weren't they as vulnerable or more vulnerable during that sell-off? Did many of them hold up better than the general market, or were they just, you know, the market's down 10%, 20%, they were down about the same equivalent, or are they even magnified from a general market decline?
Oh, I think IPOs definitely have the potential to be magnified and
Okay.
hit harder anytime the market goes into a correction. You know, growth stocks, I think by nature can go down twice as much what the market goes down. Absolutely.
Okay.
But you know, like anything else, what were the strong ones that did not do that? And those were the ones that you needed to look for to be in. And, you know, there was definitely plenty of those.
Yeah, I know you being an IBD protege are always looking for the relative strength in these issues, right?
Exactly. Exactly.
Okay. So, Kathy, anything else you wanted to show us today?
No, that was
Well,
really what I
okay.
wanted to kind of get everyone excited about. And, you know, patience is a virtue, and there's
Yeah.
no to have the FOMO, you know, because the opportunities are there, and we just need to be students of the market and continue to study and look for those new batch of winners.
Okay. I have maybe a question or two on trading psychology. How do you deal, Kathy, with a flat market, slow, unlike a 2020 ripper, for a slow, longer term trader?
Well, ultimately, I let my stocks guide me. So if my stocks are holding my rules, whether I'm using the mental capital preservation rules or I'm using a moving average rule, you know, whether
Okay.
the market is flat, going up or going down, I want to see what my stocks are doing and treat them accordingly. And I guess my best example of that is how I was able to hold Zoom during, you know, because I had it before the crash, and then I was able to hold it, you know, through the crash and then up until now. And I basically just let my rules guide me. I mean, mentally, sure,
Yeah.
it's challenging. The emotions are there, but I have the rules to guide me through that.
Okay. You know, we have many in our audience that could teach me a million things. And Albert's saying the history of success is a track record. That's why the companies are being fast tracked. I assume he's talking about SPACs. It's like crypto versus stocks. It's a new movement. of a decentralized ability to move. So SPACs are a way to decentralize. I believe he's saying that instead of giving the exchanges control.
That makes sense. That makes sense to me. Thanks
Okay.
for sharing.
Okay. So see, you bring out the best in our attendees. So you know, it's really nice to be in a community where people know more than the host.
Absolutely.
you
We
know,
have to learn from each other.
We do. And, you know, Kathy, I really appreciate you being here. And I know just from the questions that we've received today that there are people interested in IPOs. So if they want to follow you and get your research, what's the best way for them to go about it?
Yeah, the best way is on Twitter, KGD_investor. And I'm also on LinkedIn. So people can feel free to reach out to me on LinkedIn or on Twitter.
And
happy
where can
to-
they get your book?
The book is on Amazon, The Life Cycle Trade. You can go to our website, thelifecycletrade.com. Yeah, I should put back up my title
Yeah.
slide.
Do a commercial, Kathy.
Yeah,
There you
do a
go.
commercial.
All right.
So yeah, thelifecycletrade.com, and
All
you
right.
can read about us, and you can read about, of course, this interview will be posted there, and all the interviews myself and my co-authors have done. And then there'll be a link to Amazon if people are interested.
May all your picks turn into blue chips.
Yeah, I love
about
that.
All right, Kathy. Thank you so much. I'm rooting for you. I appreciate you coming in and explaining the IPOs and, you know, explaining to people that they don't have to be in a hurry, that they could monitor things. Sometimes we're paid to watch and do nothing
Mhm.
and, you know, just let things develop and to where it's so compelling and rule-based that you have to click your mouse. What do you think?
I think that's perfect, Dale. Thank you so much
Okay.
for inviting me. Always a
Well,
pleasure.
we'll do it again, I promise.
Sounds good.
All right, Kathy. And remember, don't just count your IPOs, everyone. Count your blessings. Your blessings that you can afford to trade and look at different instruments and be educated by people like Kathy that are coming in here to share what they know. And they gain that knowledge through, at times, hard knocks and learning from their mistakes. And I know people like Kathy are out there to help you avoid the landmines that you would step on without guidance. So that's a wrap, everyone. Have a great day, and we'll see you all tomorrow. Thanks again, Kathy Donnelly.
Thank you.
Adios, everyone.